Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel where we do mainly the top-down analysis of different financial securities from cryptocurrencies to Forex currency pair and even the derivative synthetic indices. And as you all know, I do my top-down analysis using pure price action trading strategy. And the beauty of this strategy is that it enables you to trade anything. When I mean anything, it enables you to trade anything. So, like I always say, if you want to learn how to do this, you can always reach out to us via the details on my YouTube bio because our October classes just started for a reasonable fee. So, without wasting much time, let's get to it. Today, we're going to be looking at not so popular currency pair Euro NZD. A lot of people stay away from these currency pairs, not knowing that you can make a whole lot of money from them as well because people want to focus on what a lot of other people are trading. So that's understandable. So on the monthly time frame, what we try to get, if you've been following our style of analysis, is the directional bias and our key zones. Now, if you're looking at my chart, you can see some light blue horizontal bars, which indicates where we have our key zones already mapped out. If you do not know how to do this, I have a video on the channel dedicated to this. It's a very, very simple um, method to follow if you watch the video. Okay, and from our monthly time frame, we can see that this particular pair has been in an uptrend for a while now. That's indicative by the um that's indicated by the sea of green candles that we've been seeing. Another thing to take note of, if I'm to zoom out, is that we can see that this upward movement has just taken out a major resistance zone. And because that's taking out a major resistance zone, as we all know, the way the market moves, it doesn't just keep going up, it goes up to come down. We can also see if we zoom in that since the beginning of this month, sellers have been trying to do their best to push the market back down by way of a retracement before it will continue upwards. Now, why do I think it is going to continue to have another level just above this most recent level that has been taken out? So, what does this mean? My directional bias is bullish, and we have just taken out a key level. All these we've been able to see on the monthly time frame. Now, does that mean we should now go directly to start pumping in buy trades? No. Why? Because we do not take our trades on the monthly time frame. So now, having gotten this required or necessary information from the monthly time frame, what we do next would be to go to the weekly time frame. And on the weekly time frame, what we aim or try to achieve here is to get a structure of the market or a chart pattern that we can work with, and also to confirm the market structure that we've purported from the monthly time frame. And we can clearly see here on the weekly time frame that the market has been making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. The market just made a high that took out this resistance zone, and then there's a retracement we saw from the monthly time frame. So not to make our chart cumbersome, I can take this out. So basically, our most recent pattern presented on this weekly time frame is this simple bullish structure where the market makes a higher low and then gives us a higher high, and currently retracing to form higher low with the hope that it will continue upwards. Now, the thing about this is, excuse me. Okay. Now, this is the structure that we have on the weekly time frame. The simple way to trade this is, just like I said, wait for the retracement of the market, and then we can now look for opportunities at this level. Also, however, it is should also be noted that the market has a liberty of coming all the way down. So until this higher low or this low is taken out, the market remains validly in an uptrend. So just to explain this without just to explain it to make it clearer. So I said this is the pattern that we have. The market came back down here, we're expecting buyers to continue pushing this upward. So to trade this, we have our zone here, and I just said that price has the liberty of coming down all the way here to make maybe a double bottom. But so long as this higher low isn't taken out, the market remains validly in an uptrend. So now, having seen this pattern and what we can do with it, then it will be time for me to add my other tools that I use in trading this market. I already have my support and resistance zones. The next tools I use for those that have been following me would be my trend line, and my support and resistance zone. So this would be the best time for me to add these tools to my chart. Okay, so I have my trend line, I have my support and resistance zones, and then because I still have an opportunity to add an internal trend line, I can do this. So because this is looks more recent than this, I can take this out, because all I need are just multiple touches of the trend line, since I have 1, 2 already. And if I still look closely, then I can still add another trend line. I think I also have a video on how to draw trend lines on the channel, so you can check that out too. And in this case, I also have multiple touches of this internal trend line, which means if anything is going to be happening in this market, it will happen there first before this one way down, so I can take this out. So having done this, I can add my other two, which is my Fibonacci retracement tool. From this swing low to this most recent high. Now, the beautiful thing that can easily be spotted here is that my Fib2 clearly aligns with my Fibonacci retracement to golden zone, which is the zone between the 0.5 or 0.618 and 0.618, or the 50% and 61.8% mark, clearly aligns with our resistance zone that we've drawn from the monthly time frame. So I can just put this here to distinguish the zone from the other parts of the resistance zone. So this gives me more confidence concerning this zone being able to be a very, very good support when price gets into it. So having gotten this confluence together, I can now go to the tradable time frame or the daily time frame. I call it the tradable time frame because that's where we can get the most recent happening in the market. That's on the higher time frame now. The most recent trend of the market or whatever is happening in the market. And from what we can see that everything we've been doing from the more higher time frames are still all aligned. Now, how do I mean? We can still see the trend of the market now looking clearer in the upward direction. We can see the retracement that we saw all the way from the monthly time frame. This is our zone, our most important zone, aligning with our in the former resistance zone, now hoping to be what is support zone. So price had broken out. We're expecting price to come back down. When price comes back into the zone, it won't just be coming into a strong support zone. It will be coming into this trend line that we've gotten from the weekly time frame. So this is a simple way in which I analyze the market, and you can see that we have multiple things to support our opinion or what we think could happen in the market. So this together gives us a high probability of making profit from the market. So the question I always ask is, how do we take advantage of this setup? So our entry time frames are usually from the H4 we can enter our trade from the H4 or H1. We can also refine such entries. So if I'm to go to the H4, so we can see that price has been making lower lows and lower highs, coming down. Where do I think it's coming to? Into this place. However, we can see that price tried to take out this level, but a lot of people would now be encouraged. Of course, they are seeing a bullish engulfing candle. A lot of people will be encouraged to jump into this trade here. But all I see here is inducement and manipulation. Now, why do I say that? I believe that yes, this market could buy, but it's not going to buy very far. I believe that this would beat a lot of people into this setup, and then price is still going to come down to this level. So my best take would be to patiently wait for price. Even if it doesn't come down here now, it's likely to do so in no time, in the soonest possible time. I would advise for you to wait patiently for price to get into the zone before looking forward, buy opportunities. But if you're skilled enough to take any buy opportunity here, then you have to monitor it really, really closely, because my best advice would be to wait for price to come into the zone, maybe probably touch this trend line. Once there's a change of character, you can take your trade. Doing this maybe probably with a counter trend line. Once the counter trend line is broken and price closes above it, then you can start looking for your buying opportunities. So this is my simple outlook on EURNZD, the EURNZD. And if you are into the trading of this particular pair, you can compare this with your analysis. Don't forget to like, don't forget to share with others, don't forget to subscribe. You can drop your comments also in the comment section telling us what you think, or if you have a particular currency or index that you would like us to analyze, then you can let us know in the comment section. Like I always tell people, this particular strategy helps you to trade anything. Yeah, I can confidently say that it can help you to trade anything so long as there's price and there's time and backing that particular price, then you can trade virtually anything. When I mean anything, I mean anything. So if you want to learn how to do this, you can reach out to us. I always advise people, relying on trading signals is not the way. It can only get you um, 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 far a bit, and after some time you start seeing the detrimental effect, because it cannot really make you profitable in the long term. I, for one, I have a free signal group. I'll be attaching the Telegram channel to this particular video, where I drop free trading signal from time to time. But I also tell them on the group that that's not the best way to go if you want to become an independent, profitable trader. So thanks for watching this video. Thanks for always supporting my channel. Please subscribe to the channel, because my YouTube analytics show that over 87% of those that watch my videos are not subscribers. Do well to subscribe and help this channel grow, help others get visibility of it and learn from it as well. And have a wonderful day ahead. Cheers.